Hi, my name is Fan Yang, your Chief Technical Strategist here at ForexMinute.com. You're watching today's Forex video briefing. It is Wednesday, July 2nd, early in the U.S. session. Traders today are probably focused on tomorrow's non-farm payroll, especially for the U.S. dollar. Today we did get better than expected ADP non-farm employment change, coming in at 281,000 for June, which beat the forecast of around 207,000 and eclipsed the 179,000 in May. Okay, so tomorrow we're likely to be in line or even better than expected for the non-farm payroll, and this is setting up for some US dollar strength, which we are seeing right now. So let's take a look at the charts. The US dollar index has been declining in June since tagging 81. It is starting July stalling at 79.75, and after today's ADP jobs data, we saw traders buy up the US dollar in anticipation to tomorrow's non-farm payroll data, which had always had a bigger impact on the market than the ADP reading had. The falling trend line from June will be the key factor to watch for tomorrow. If traders can pop up above the trend line, a bullish reversal is in the cards for the US dollar. Otherwise, the greenback remains bearish under this trend line, and traders could be looking to sell on this rally. And if the non-farm payroll is only in line with estimates or even a little bit lower, we're likely to see that sell-off. Especially if it's below 200,000, we should be, in that case, we should be seeing a major sell-off towards these low July low, or this recent low here for this week of 79.75. Another thing to watch for in the RSI, when it gets back to 60 and if it stalls there, that shows that the bearish momentum is still in place. And again, if after the non-farm payroll the price starts to fall back below the away from the resistance trend line or channel trend line, then we could be in a bearish continuation with the RSI staying below 60 as well. The US dollar Japanese yen pair should remind you very much of the US dollar index in this 4-hour chart. It is also rallying after a bearish market in June. The 101.90 area will be key in the 4-hour chart. We should see resistance here if the US dollar Japanese yen is to maintain a bearish outlook in the short term. You see that it's also this falling trend line and the 200 moving average in the 4-hour chart. Okay, however, a break above 102 neutralizes June's bearish outlook and puts the US dollar Japanese yen right back above the middle of 2014's consolidation range, which was roughly between 104 here and the 100.76 low. So right above 102, we're right back in that middle of the range. No trend, no direction. The euro has been a wounded currency this year as the ECB continues to consider stimulus. However, traders seem to have formed a price bottom in June. Last week we saw the euro dollar break above the 1.3676 level, which was the previous June high. This week so far the pair is in a pullback after failing to breach the 1.37 level. A break below 1.3620 here should be key support, reinforced by a rising trend line in June. A break below 1.36 flat, however, along with the RSI dropping below 40, would be a sign of bearish continuation. The euro dollar will also be affected by the ECB meeting before the US non-farm payroll tomorrow. These two event risks are likely going to shake up the euro dollar, so we should watch the reaction around the 1.36. If it is all said and done and the euro dollar holds north of 1.36, even if there was a breach of this trend line, if it stays north of 1.36, then we should anticipate further euro dollar bullishness going into next week, since it would have established this price bottom. Okay. Otherwise, staying below 1.36, again, we're looking at that bearish continuation back towards 1.35, 1.3476, 2014 low. Thanks for watching today's Forex video briefing. Once again, I'm Fan Yang, your Chief Technical Strategist here at ForexMinute.com. Trade well, trade safe.